mission is to bring together top venture capitalists to compete so you have the insights on how the best VCs invest.
Let's just start off by introducing yourselves because you guys could do that better than I can. Why don't you start with yourself over
Hey
there?
everyone, Adam Mastrelli, former IBMer. Actually in the hardware division, doing Linux One, so very happy to be back here on, thank you very much on Z-Day. I now basically am the U.S. partner for a venture fund only in Web3 called Woodstock. It's the largest Web3 fund out of India. I'm the U.S. partner. I'd lived in India before, lived in Malawi before, so this kind of idea of taking incredible engineering and incredible emerging markets and mapping that to the Web3 space is what I do. 70 plus portfolio companies, 2019 vintage of the first fund, and we just closed a fundraise for Fund 2 4-ish, 5 months ago. So as you can imagine, fundraising in 2022 was fun. Happy to be here.
Carolina.
Hi, everyone. I'm Carolina Rojas. I am with Distributed Ventures. We focus on healthcare, fintech, and insurtech, Series C and Series A focused. And I think a core tenet of our fund is really adding strategic value. So we have strategic LPs, which I'll talk to more about later. But yeah, that's a core tenet of what we do, connect the dots with distribution partnerships. And a part of our investment team, we also have a heavy mix of both operating experience and tenured investors. So that is a bit about us. And we're also deploying out of our second fund, which we also raised recently, which was a doozy, but we made it. So that's we're here. So yeah, happy to be here.
Erica.
Hi, everyone. I'm Erica Duignan, co-founder and general partner at Rain Ventures. We are tech generalists, and we focus on working with amazing seed stage founders. Our fund leads seed rounds and then follows on in Series A and Series B. We're about half consumer tech, half B2B enterprise software, but we're really looking for companies that have a unique ability to harness the power of community to build amazing billion-dollar businesses. We've already proven that with at least one company in our portfolio, which is really exciting. We have a 2021 vintage Fund 1 that is just killing it, and we're in the process of raising our Fund 2. So really excited to get to know you all better and hopefully connect with some of you after the event today.
Very cool. Very cool. Let's keep going with the clapping. There we go. Austin, your home court here,
All right. So Austin Flon, great to be on this panel with all these esteemed VCs here. So I'm representing IBM Ventures, IBM's corporate venture capital group. We're investing in things that are strategic to IBM across B2B software and things like big categories like data and AI, huge focus on AI right now, sustainability software, automation, cybersecurity, as well as quantum computing, seeding a software ecosystem around the next paradigm of computing. So super excited for this panel, and I look forward to the competition.
All right. Let's get this going. Yeah, you give it up to them. Let's give them some. We'll give you a lively audience.
Come on,
This is
Austin.
live stream. IBM Z Day. All right, so it's New York Tech Week. Many founders will be rubbing elbow with plenty of you venture capitalists throughout this week. And a commonly known phrase is, how can I add value? We hear that a lot from the VCs, but really is the question like, how do you add value? How do you separate yourselves from other investors, and how do you add value? I'll just start here, Austin. We could go down the line.
Yeah, absolutely. I really love this question. I'm for IBM Ventures in charge of really our value add post-investment. I lead all of our portfolio development efforts, so everything I try to focus on after we invest is how can I be the best possible investor for them. And what we focus on at IBM Ventures is helping you create enterprise partnerships with a company like IBM, walking you into the door of some of the biggest clients that you could dream of landing, as well as creating on-ramps for your product through software integrations and consulting engagements throughout really the world. So there's an amazing scale that we can offer and value by connecting into a platform and a company, an organization like IBM. So trying to navigate that from the external side is nearly impossible. It's hard enough internally, but being able to walk the founders into the doors of the executives and people that matter for their business is invaluable.
All right, Erica, How are you adding value?
Yeah, well, this is kind of a funny question because I think most founders feel that their VCs actually destroy value. So, number one, do not destroy a good thing that they have going. But I think we really differentiate ourselves because we take an incredibly hands-on approach with our founders. We feel like this is a relationship business, and trust is the most important thing that most founders want to have with their VCs. And so that means, being there for our portfolio company founders day or night with whatever the ask is. Text us at 2 a.m., text us at 5 a.m. We're going to respond and give you what you need. So number one, trust is incredibly rare in this world. And then number two, just an absolute willingness to open our Rolodex and leverage all of our relationships on behalf of our founders. My business partner Monique is pretty amazing. She ran a very large music label in, the music industry for a very long time and developed amazing relationships with Fortune 100 companies through that. And so we bring all of those resources and decades-long relationships to bear for our founders. But third and most importantly, it's really just kind of being that emotional support person, right? Being a founder is incredibly hard, and we know how draining it is and how much it takes from them emotionally. So we want to be their biggest cheerleaders in the good times and also their biggest support system when things get challenging.
All right, Carolina.
Yeah, I think for us, I also love this question because this is a core tenet of why we were built, was the fact that it is very difficult for founders to sell through corporate structures, for founders to really catalyze growth in the early stages. And for us, in a down market, I think a lot of founders are very astutely asking, how are my investors adding value? And for us, a very clear answer that we have to that is, one is our strategic alignments. As I mentioned earlier, we have strategic limited partners, but we've been really intentional with how we built those relationships. And across our strategic partners, we have buy-in from the C-suite, different heads of business lines. So when we say we can catalyze growth, it means we can push to plug out legacy systems, plug in our portfolio companies, really push for distribution, national partnerships. And we've had a really strong track record of doing that across our first fund and mimicking that with our second fund, along with other LPs that we've brought to the table. And I think second is also really providing that hands-on support and being in the trenches. That's a core reason as to why we invest in the seed, is because we're really active partners. And as I mentioned, we have a mix of operators and tenured investors across our investment team. And so we can add really specific advice and across different stages. And I'd say generally just for growth, that's one big thing that we catalyze in this market. That's been really hard to come by, really having measures that you can point to across your investors that show this is how they helped catalyze growth. And I think that's something that we really bring to the table.
Nice. Adam.
I have nothing left to say.
Yeah.
So ours is a little bit different because we're Web3 is a lot of technical founders. The good news is that we're a bunch of engineers on the team. So I think we separate it out into the technical side of adding value and then also on the business side. On the technical side, it's a lot of running validators, tokenomics, strategy, et cetera, on liquidity mining programs for early stage founders. Because, in that way, Web3 is kind of run, not B2B. It's very much going to the people first in that way. On the second side, obviously, what all of the other panelists said on being up at 2 a.m., texting people. I live in the United States. A lot of our founders are in Dubai, India, Singapore. So being up at all hours is very comfortable. And then I think hiring is a big one. A lot of these times helping early stage founders find this next person or few people either on an executive team or early stage engineers is a big one. And then I think obviously strategy, writing theses and relationship building for customers and also for maybe strategic partners that they need in, which they all will come to us later rounds. I think obviously help on fundraising for our founders is important.
Okay, so this is what we're going to do. We're going to bring up the QR code. This is going to be our first trial at this. And usually it's a little bit of a popularity contest. So I'm thinking Austin might have the edge just given that he's got the home court. And the doll's going to do the QR code for the live stream as well so that everybody could see that. So if we don't get that right away, we will fix that. But the QR code and the voting is up. There we go. Look at that. Nadal's the best. As people are voting, we got to admit, I heard a lot of strategic partners. I mean, do you guys want to give a shout out to any strategic partners? Because that's pretty cool. No?
Do we want to?
Yeah. Do you want to give a strategic?
Yeah, I want to give a shout out to one of our largest LPs, Alphabet, who has been amazing support system for our portfolio companies,
That's a
and
flex.
they do a ton of things. So, also would love to do a quick audience poll. How many of you here have had an investor that actually added value in your company? Okay, that looks like,
It's like 4 or
maybe
5 people.
5%.
Yeah. 4 or 5 people.
We got to do better, investors, right?
Wait, how many people had an investor that didn't add value? Okay.
About 50%
Just make sure
there.
those weren't all the
50%. Everyone else is looking for capital so that you guys can add value. Nadal, how are we doing? Can we show the results right now just to get this first question off the books? There we go. Oh, well, still moving. How many? I can't see. 52 people right now. It's still moving. Erica's taking it, and we'll close it out in about 10 seconds. But this is how it works. This is what you're gonna be seeing, and the more votes that come in, the more this will move. But
And remember, this is a co-op petition.
yes, yeah, right.
Also, while we're viewing this, I want to give a shout out to NFP. They're our largest investor.
What does that stand for?
So they're a large insurance broker. And yeah, they're great. They have over 300 billion in retirement assets. They acquire about 45 to 50 companies per year. So they're getting even larger. And so they've been such a strong strategic partner, such a big advocate with having more tech in the insurance space, and fintech, healthcare, and beyond. And so, yeah, kudos to them.
Yeah, shout out to all the LPs out there and that want to come out
Yay.
and help it.
We love LPs.
Yes,
that
we
add
all
value.
love LPs. Erica won that, so let's give it up to Erica. Come on in.
Thanks, guys.
Join the party.
Couldn't do without you.
Welcome to the party, pal. All right. Second question. This is a macro question. There's a lot going on. This is state of the market, current state of the market. With the current state of global conflict in the Middle East, there's a lot going on, crazy stuff happening. Does that create hesitancy to deploy capital to founders? Is it making it hard for VCs to raise from LPs? Carolina, why don't you start this one?
Yeah, I'd say right now, there hasn't really been a focus on what will be the economic impact. I think we've all kind of just been holding our breath and witnessing what's been happening. We personally, as a fund, have been just trying to support our portfolio companies as much as possible, especially folks with ties to the region, selling into the region, and just making sure that we're an advocate for them. So that's kind of, it's kind of at a standstill right now in terms of what will this mean from a capital impact perspective. But we want to make sure that we're showing across the board that we're very supportive. So that's kind of my 2 cents on that.
All right, Adam?
Yeah, this is obviously a very, I'm the wrong person to ask on global politics, and I think overall this is the wrong time on this, but I'll do my best. So how I look at this is some version of, there's three things going on. One, you need to see if the country that you're in or deploying into is running a big deficit. Are you spending more than you're saving, or are you in massive debt? The U.S. government, we've added it's going to be $2 trillion, and this year we're up to $32 trillion totally. Two is the area that you're living in. Is it civil? How is the government? How are the people treating each other? Civility, is it high? I'll give you the example. We've seen where civility is not high, and then you look at a country like Singapore, where the civility is very high. I think that's important when deciding where you want to either host your organization, your company, or where you're deploying into. And then the third part is, are you in the way of global conflict? This is not my methodology. This is purely Ray Dalio, so I'm definitely mimicking him. But I think that part of it, those three components are pretty important. And then the other part of it is, since 1980, most investors in this room started at that point. That is during a high interest rate environment, and now we've only seen interest rates start to go down. So most investors now are in, it's a low interest rate environment, but it's going to go up and up and up and up. And so how do we how do we operate in a high interest rate environment? And I think that is a pretty different way of looking at things. And I think you'll have to see which sectors. So I think it really depends on where you're deploying capital. Whether that's fintech, commodities will be high, energy will be high, healthcare will be high. Yeah, speculative assets low.
Erica, what do you think here?
Yeah, I have sort of a counter view to that. I don't think that we're in a low interest rate environment any longer.
I said we're coming up.
Yeah, well, at this point, the yield curve is looking pretty flat. So I think we've probably peaked as far as where, interest rates are going to go. I don't expect them to get significantly higher in the near term. And compared to, the last 15 years, this is an extremely high interest rate environment that folks are not used to operating in. But one of the things that I think is so interesting is, have any of you guys noticed that basically since 2019, we seem to have had a 100-year macroeconomic shock happen like every single year, right? It's COVID, it's civil unrest in America, it's rapidly rising interest rates, it's the Ukraine war, it's the unrest in the Middle East. So, given the insane pace at which these truly, impactful and very often to the negative events are occurring, we can't bother to try and time the market, right? Especially when you're investing as early as we are. So as VCs, especially seed stage VCs, we are deploying, with sort of a very consistent pace, right? We're usually investing, adding about 8 to 10 new portfolio companies to our fund each year. And the reason for that is because innovation is going to happen in good markets. It's going to happen in bad markets. And our time to exit is pretty long, right? It's 5 to 10 years. So when we think about timing, we're not doing it on the deployment side. We're actually doing it on the exit side, right? Hoping that somewhere in that 5 to 10 year window in which we have to harvest our gains, there's going to be favorable economic conditions for our exit. So deployment, always steady, always on pace, and we're always investing.
Austin.
All right. So for us, I would say, in the good times and bad times, we're going to continue to invest. IBM's going to continue to acquire companies. Within the down markets, I think there's even more opportunities than even in some of the up markets where there's opportunity to get into companies at even better valuations and have more opportunity to see companies created that, you have a bunch of people laid off at a big tech firm that went and created their own company now. And they were given that opportunity because, layoffs or a recession may have happened. So I think there's innovation that happens at all times. For us, we've been deploying more capital the past 5-6 months than any time before. We've seen a tremendous amount of great companies and innovation in the market. And we're going to continue to deploy capital where we see the best companies in the segments we're looking. I'll say on certain elements of the world right now that there's more caution, like in the Middle East, with everything that's going on in Israel, which is absolutely horrendous. There's new caution to deploy capital in really hot startup markets where we've invested in multiple Israeli startup companies that are doing amazing work that are now being disrupted by obviously everything that's happening there. I heard from someone this morning that a startup they were about to invest in, 5 out of 8 of the employees of the company just got called up to reserves. That is a disruption I don't think we've ever really seen in a lot of really hot startup markets. Like, we've never seen that in New York or Boston or SF, right? This is, for our industry, a market that is so important for what innovation comes out to the world. And that's a new risk that I think our industry has to be keenly aware of and cautious with. I think there'll still be a tremendous appetite to invest in that part of the world because of the resiliency of the people and the great innovation that continues to come out of there. But it's a new due diligence question I don't think we've ever had to ask before, is what percentage of your company is now in the reserves? So it's a crazy time. I think we need to be very, back to the value question, as helpful as we can be. I know the founders I talk to that are in Tel Aviv and other parts of Israel, I'm trying to give them as much ability to operate and work with us however they need to, whatever they need, like outside of the partnership we're creating or the client we're chasing. None of that really matters when you're trying to keep your family safe. What can we do to help you, and how can we just be there to support you?
So I was just in Tel Aviv in December. Amazingly beautiful city, beautiful country. And so I'm well aware of, the incredibly robust startup ecosystem they have there. But, just coincidentally, it's so interesting when the Ukraine war started as well, so many startups had outsourced development talent in Ukraine. Like, so that one also really impacted. I mean, it's interesting because, I think folks sometimes don't realize just how global, our startup ecosystem is, right? It is local, but it's also global. And, I just love that you sort of focused on how you're helping your startups that are in the Middle East right now. So thank you.
Voting is up. LP side. What about the LP side? I don't know if we touched on that. Did everybody touch on that? Yeah. Okay. All right. Any other thoughts before maybe you win or steal the round, or you guys want to jump in here? Go ahead, because we gotta keep this moving. Good.
I have one LP. It's pretty easy.
Oh yeah. I wonder who that is.
I think, so I'm an LP in other funds. We have LPs, obviously, in our fund. I think communication is paramount. I just went to an LP summit for a hedge fund that I'm a limited partner in, and they do a good job of communication. We do the best when we hold our summits, when we write our newsletters, we make sure we publish our thesis. When you're down, when you have a crazy year like 2022, your LPs need to know that your conviction is strong. Cliff Asness, hero of mine from AQR, is like, you want to be right, but you want to be right like 11 minutes later. That's not going to happen. The job of the VC, the job of the hedge fund manager is to stick with that conviction, even in the downtimes. And so that's where the gray hair and the loss of hair and the late nights comes from. But you have to communicate that to your limited partners through newsletters, AMAs, all these sessions, so that they know that their capital is safe, whether it's 1% of their portfolio, 5% of their portfolio, et cetera.
I think also LPs have realized that some of the best companies are built during down markets. So I think there's also been a really big appetite from limited partners to invest in emerging managers, to invest across the board in venture funds in this market, despite interest rates rising and some of the other macroeconomic risks. I think there, to your point in terms of this is a long game, I think they've definitely recognized of like, this is a huge opportunity to invest in folks that are resilient, that they're able to make really strong businesses in weaker markets. And I think that's a huge positive for the industry.
Okay. Voting is in. Austin, you've won the second question. Congratulations. Let's give it up for Austin. Good job, Austin. IBM Ventures, unbelievable. All right, we're going to move on to 3. AI. You guys have heard of AI, right? AI is a pretty big thing these days. AI is getting even more serious. Amazon drops $4 billion of investment in Anthropic to compete with ChatGPT and Google Bard. The question is, who is winning? Will it be a company, or will it be an open source technology that will rule supreme? Erica, who's winning the AI race right now?
Yeah, well, I think at this point, really everyone's winning because apparently every single company that I speak to is an AI company. So, and I think that, of course, there's going to be a massive investment in massive models and massive platforms, but I think open source, is likely to have the long-term competitive advantage. And I think the most important thing to realize here is, this kind of reminds me of the internet bubble of the late 90s when a company would just slap .com on their name and all of a sudden, they'd add an extra $1 billion in enterprise value. We're seeing the same thing here with AI. And truthfully, AI is just another tool like the internet. It's going to be a utility. It's not going to be, something that one particular company is able to gatekeep and extract all the value from, but instead it's going to be, a new way for us to more efficiently deliver the tools and services and innovation that companies have already been doing. And it's going to become much easier for people to integrate it into their business models. As we've seen, almost everybody has already figured out how to integrate it into their business model in some way.
Carolina.
Yeah, I think regardless of who reigns supreme, I think cloud providers are really the ones that are benefiting right now. So with generative
Shout
AI,
out to IBM, IBM Cloud, wonderful.
Yeah, shout out. So with generative AI, it's really cloud-based GPUs that are training the models, refining the models, and so there's been some really staggering statistics of 30% of generative AI revenue is going directly to cloud providers across all the companies that have been built that are leveraging AI that are venture backed, it's something around 70% of that initial venture backing is going directly to cloud providers. So it is pretty staggering.
By Amazon.
How, well, yeah, so the news with Amazon to me, it really was not surprising because they have such a vested interest in continuing the flow of generative AI using their cloud services. And so I think it's, even if the model's not up to snuff today, it's just another way for them to expand the revenue that they're already capturing on the cloud side. So, I think cloud providers are really benefiting from the boom in this space right now.
Austin, who's winning here?
So I'm going to go with NVIDIA. I mean, they just have the monopoly on the GPU market where people are lining up around the door to throw money at them. It's an unbelievable market opportunity, and hats off to them. They did a great job at it. But outside of, down to the hardware layer of what makes this kind of innovation possible, who I want to see winning out of this is really society and what we could do with AI. And all right. Thank you. But no, really, like if there's incredible optimization and efficiency gains for everyday tasks that, we don't want to do on our day-to-day that is very low value add but takes up a lot of time, I think it would be incredible to take some of that time back for society and have more meaning from your work. So that's my kind of like, super optimistic view on who I want to be winning out of this. On the open source element of the question, we don't really subscribe to like the one model is going to take this market. I think we're big open source believers. We invested in Hugging Face's Series D round, and that's not just an IBM Ventures statement. Look at who's in that Series D round. It is like 10 of the biggest tech companies, minus Microsoft. And it's a huge statement to the market of where we believe this is going. It is going to be an open source market. Not a dig at Microsoft. They have a great partnership with Meta for Llama 2. Like they're also hedging their own bets. It's not just going to be OpenAI. So I think it's open source, hoping efficiency for the people and NVIDIA.
All right, Adam.
Yeah, like we were hoping AI gets people a 4-day work week finally. Yeah.
Adam.
Yeah, I agree with Austin on the who wins is optimism. And if you read Mark Andreessen's Techno Optimist article last few days, if you haven't, I encourage you to read it. But that's the difference between centralized planning authorities and open systems. And then I think that's something that we saw with hardware, right? So it won't be one or the other. It will be exactly what happened with cloud. Everybody said the cloud's here. Get off the mainframe. How many people here that work in Z have heard we're off the mainframe? Show of hands. Yeah, there you go. So the one guy. So everybody's been saying get off the mainframe. We're getting off the mainframe, but there are really important workloads that are great on premise for certain security and governmental issues, and then there are certain things that need to be off in the cloud that can be similar to payments. So there'll be a on-prem and a cloud version. AI, there will be an open source and a proprietary. And I think optimism works on this. And the big one for me is not only as a consumer, what I'm looking forward to, like what's going to happen, but I go to a lot of dev conferences. The time frame to be able to develop applications it's gone from 6 months to like 3 days. I mean, this is the back end stuff that we're going to be able to iterate, and we are iterating so much faster. That part I'm really excited, and I think the company that nails content, the company that nails whether that's Runway ML, like we love Midjourney, whoever does this, and it can be both modular, but I think it might be integrated, which is where companies like Google, Amazon, Meta start to win. I think you really, really will be interested to see who wins that storytelling. The writer's strike, Gavin and I were chatting earlier. I mean, if I were in entertainment, I would be quaking in my boots.
Let's bring up the QR code. Everybody that's over there should be probably voting for Adam. I'm not just saying. He's really giving them a lot of love over there. He's leaning over there. That's pretty good. Anything else we missed on the AI front or anything that's exciting that you're seeing? Shout out to any portfolio companies that have some.
Yeah, I would love to give a shout out to 2 of our portfolio companies that are developing AI products. So the first one is Acern, anyone who is interested in or works in financial services, they have really amazing tools that let you build apps and create apps to customize sort of information that you want. And they're specifically trained around the language of financial services to give you the most accurate data. And then our second one, which was voted Legal Tech Startup of the Year, ClearBrief, amazing female-founded company, as you said, taking away a lot of that really sort of busy work, the drudgery out of filing legal briefs and making sure that folks are getting the most accurate information. So we love those two. I guess that's 2 out of 16 of our companies are real AI companies, which is pretty exciting.
I'll give a shout out to this is an angel investment that I made, so it's not within the fund. It was a little bit outside of the fund, but it's a friend of mine, undergrad from Duke, where I went. He's awesome, like 20 years old, and he does like an autonomous AI agent for security. So if you're in security, you're going to solve problems number 1 through 10. Everybody knows that. So also the hackers know this. So now what you're going to do is you're going to have an environment where you put an autonomous AI agent and you tell the agent to go run amok in the environment to go bring up and pop up anomalies within the security landscape to be able to better predict that. This is fascinating. And not only does it work faster, but it also, you can really point to which things you're preventing. So that's that company. They've changed their name, but if you're interested, let me know afterwards. I'll connect.
What's their name? Give the shout out to the name.
I'm there. He's literally changing it like this week.
You don't want to drop that.
I really hope their AI doesn't gain consciousness and go.
I hope not. I hope not. Exactly.
Austin pulling away again. All right, Austin taking this. Austin.
It's an IBM crowd. This is a home game. This is a home game.
Yeah, I tell you.
I planned half of
Home game, man.
There
Come
are
on.
people
Wait, how many
live
people here
streaming.
report to Austin? No, exactly.
They're live streaming. Yes. Roberts, Citizen Spec.
Is it what?
Yeah, it's usually.
Did you create some bots?
Yeah, no.
No comment.
AI bots. This is usually a fixed game, just so you know. Speaking of a fixed game, FTX lawsuit ramps up. Feels like, it feels like crypto and digital assets are on trial as well. Where do we land when the dust settles with crypto and digital assets? Are the tides turning? There's been a lot of different things in the news. BlackRock was in the news too. But Adam, kick us off here.
Yeah, I'll be short on this because I could talk about it for hours. This is my day job. I literally have been doing this as a limited partner in another fund since 2017. I was IBM blockchain for a few years. I did all the hardware, and then I left for the venture fund. So it might be on trial, I think, for like the general public, but for the people that know, it is not on trial. Not on trial. Literally, I met Larry Fink in 2019 at an Economic Club of New York event. I pulled him aside. I said, Larry, he doesn't know me. Why would he? I said, so digital assets, Bitcoin, crypto. He laughed right in my face and walked away. Okay. What did he just say this week? Anyone see it? Crypto is a flight to safety. Flight to quality. You might have said safety. Flight to quality? Same thing. Quality, safety, flight to quality.
Safety, maybe.
He meant safety. That's incredible. That is the largest asset manager in the world saying that. That is not on trial. This is coming. It will be here. Now, FTX, I lost a good amount of capital, my own capital in FTX, so I've felt the pain. But in the same way that, Bernie Madoff, we've had this happen before, that doesn't mean that finance goes away, right? The amount of fines that banks pay today, yearly, dwarfs anything that, or at least is pretty close, dwarfs anything that is gone wrong in the crypto industry. And it's a nascent industry. So I don't feel like it's on trial. Plus, one more thing, and then I'll really shut up. There are 4 or 5, and check out things that are going on in Congress, bills that are moving through. Lomas Gillibrand bill, the stablecoin bill. We found a use case, and it continues to go. So not on trial for me. I bet my whole life and my career on it, and I talk to people daily about this. So it's really an exciting time. I also know that it's not on trial due to the electric capital. If anybody's not familiar, the developer report. I mean, we're down year to year, developers, but this was 2022 was a rough year. Three Arrows Capital, Luna, FTX, but we're up over 3 years, and the best and the brightest are leaving to build in digital assets and crypto. With AI, this will completely revolutionize how payments are made.
Good insights. Austin, what do you think here?
Okay. Yeah, I mean, I don't know if I'm as bullish as you. I think in the longer term I am. I think in more like the medium term, I think there's going to be a bit of pain that this industry has felt. That's going to take some time for like those bruises to heal up and for people to be comfortable deploying capital and innovation in some of these digital asset crypto markets. There's plenty of funds, Adam, like yourself, that's doing great work investing in great new innovation. But I think as the broader VC industry, I think there's a number of funds that are going to step away from some of that, and maybe that's better hunting for you, so it's appreciated. But
we've actually had more interest now.
Have you?
After FTX, everybody knows now. I mentioned earlier, Erica mentioned this is the best vintage. This is the best time. This is the vintage, right? And I'm not just saying this, but I'm literally allocating myself into this vintage. From venture, hedge funds, that's long only, long short, event driven. This starts to be intriguing. Quant funds are not just ARB, stat ARB, all this stuff.
Yeah, I mean, a lot of markets, right, when it looks the scariest, like 2020, you're like, wow, that was the time to get in. So, you might be sitting up here in a couple years looking like the smartest guy in the room investing in crypto in 2023. For us, it's not a big focus. So, I'm coming at it from just a personal point of view on it. I like the industry. I was super excited to see a lot of the innovation and kind of the disruption to the legacy banking industry. I think it's much needed. I'm hopeful that it does turn around. I guess I'm just a little bit more pessimistic that the next couple of years will be rough before it gets better.
Totally agree with that. And can I do a shout out?
You're really taking. You want this round.
I want this round. Shout out to Gavin from Project Venkman. So he was working with Bill Murray. There's the whole digital asset side of it that's finance that we know, and there's the whole exceptional side of NFTs and creation and ownership, digital ownership, like you would with art and music. Spotify kills creators. Right, the take rates on this are ridiculous for Spotify. So taking those take rates down and giving them to artists, that's something. So if anybody's interested in that, ping Gavin.
All right, shout out to Gavin. Erica, what do you think here?
Yeah, well, it's a great question because literally crypto is on trial. I'm actually chair of an SEC committee on capital formation. And apparently, just from the FTX case alone, there are going to be like 100 years of lawsuits sort of that are getting lined up by the SEC. So I personally think that it's been incredibly abused. I think that it's natural that a technology, a style of sort of doing business where nobody's really responsible, right? Like there is no place where the buck stops, right? It's sort of sold on, oh, well, it's disintermediated and decentralized, but that also allows people to do a lot of fraud and to sort of leave no one holding the bag. I don't love the idea of a financial system that doesn't have actual people responsible for the things that it creates, because when bad things are created and a lot of money is lost, everyone wants to say it's not their fault. They weren't responsible, they walk away from it. And I think if after the FTX situation, you want to sort of double down on this industry, you just might take a lot to sort of learn your lesson. So, I've never been a big supporter of crypto. I continue to believe that the blockchain is incredible, innovative technology and has a lot of great uses. But unfortunately, we've also created vast additional environmental damage through what is essentially a giant Ponzi scheme in crypto that creates very little value and creates a lot of economic damage. So I sell.
Carolina.
If you want to, those are like terrible talking points. So the energy one has been debunked. No value has been debunked.
I don't
Of course,
think
it's been
so.
debunked. So this is, guys, that is a very.
We'll see how your
very not
portfolio
good take.
looks next year.
Especially for that. It is
Didn't you
not
say
a good
you
take.
lost a bunch of money in FTX? So
Correct.
I'm sure you were telling people.
I personally lost money. That's right.
You and Giselle were
if you're
hanging
not
out telling people to buy FTX.
if you're not taking risk, you're not a VC. 16 investments over I don't know how many years. That's fine. 70 plus when you're starting to risk, and your LPs are not paying you to play it safe, right? They're in venture. This isn't holding a T-bill.
I will say a net positive of this being on trial is the fact that I think it's shown a light on the lack of regulatory framework that the US has for cryptocurrency and to really encourage more innovation in the space. And that's why folks have left the US to build outside of the United States. So I think a net positive is that this will encourage regulators to figure out a framework that's going to encourage innovation, but also on the flip side, for the company side, folks really have to be rigorous on in terms of building in the appropriate way and having the right measures in place. And so I think the confluence of both of those factors will be a net positive. What I'm really excited about is some of the innovation that wealth managers, for instance, right now, they're picking up on. There's rising appetite for cryptocurrency around the wealth management space. And I think that's really low-hanging fruit for the cryptocurrency sector in general. And so with the cryptocurrency ETF that now is going to pass regulation or hopefully pass regulation, that's been a really positive catalyst for that in the space, which that will just cause more folks to have access to the asset class. It'll cause just generally more of a widespread focus on cryptocurrency, which I think is a net positive. But again, I think the regulatory framework is where it starts, and that's what needs to be fixed for there to be more widespread adoption.
Yeah, and just on the holding people responsible part, final part, you definitely hold people responsible in crypto. There are contracts, there are foundations, there are people involved. 2008, we know who's responsible for that crisis. We held them responsible. How many people went to prison? One. One person went to prison. How much money did they get? More money. So when you're in a system that has people that are basically using capital to basically gamble without any, this is actually cleaner and clearer. The US government gave people that are responsible more money. Crypto alleviates that problem. And if you didn't see that from 2008, you weren't looking.
Definitely didn't see that. Definitely think that crypto is gambling. And I think that real venture capitalists invest in building companies, right? It's not just about taking risk. It's about building companies, not investing in
when you actually understand what crypto and blockchain is, come back to me.
Okay, well, we'll see. We'll see. I think you're learning your lesson. We'll see how things go over the next couple of years.
All right, let's see you. Friendly debate. Friendly debate. This is fun. This is what you came here for.
With amazing investments like FTX.
You guys are great. Let's see who won this round. There you go, Adam. Adam, I think that's...
Go, Adam.
Adam and Erica right there. Tight, right there. That's tight. So what's going on right now behind the scenes is my friend Gene, who's helping us out, is calculating the overall winners to move on to the finals. Then the other two, I don't want to disappoint whoever doesn't make the finals, will sit on the sideline with us. You don't have to move physically, but you'll be on the sideline. You can help me out with some banter and agree or disagree on who is saying the right stuff here.
By the way, Adam, what I can endorse today is your sneakers.
Thank you.
I like them.
That's right.
Shout out. Thank you so much. This is on Instagram, kingcustoms.s. Kingcustom.s. Ping me. Cody, young guy from Wisconsin, 21 years old. These are my fun sneakers. I had him do customized sneakers. I bought another couple of pairs, and I'm going to give them away for the holidays. So hit me up, and I'll find you. And Cody is an exceptionally talented young guy.
That sounds like you're bribing the crowd right now a little bit.
I may buy you sneakers.
See what happens. Why don't you get me a pair of sneakers first? PrimeTime VC. I'll give you the logo, and we'll make that happen. Gene is texting me. I'm going to do a little facial recognition here. And let's see what it is. You guys got a drum roll here? All right. Finalists are Austin, home court advantage, of course, and Adam. Adam made it to the finals.
Let's go, Austin.
That was a come behind finals right there. That was dramatic. All right, good. So Erica and Carolina, you're going to help me out with the banter here, but let's move on to the finals. First question in the finals. Will AI save healthcare system in the U.S. at its soaring costs? What needs to happen for it to be more broadly adopted by healthcare professionals and the health professionals? Austin, why don't you start?
Yeah, sure. So the healthcare industry is a highly regulated, slow to adopt technology industry in my view. So they do need to adopt AI. They do need to create better efficiencies and processes so that it's easier to democratize the access to healthcare, to make it cheaper and better value for the patient. My worry is that they incrementally use AI to increase the profit margin of their industry today. A little pessimistic. What I think needs to happen, the more optimistic view of it, is that we need a brand new, like net new entrant into this market, born on AI, leveraging the technology to operate completely differently outside of the normal framework that the healthcare industry has operated for decades, that has only gotten worse and worse. So I'm hopeful that some great entrepreneur comes out of nowhere to develop a new system, heavy AI use to create a much better system, for society and for humans to get the healthcare they need, obviously with a human in the loop. I'm not going to go to a doctor that's just AI for probably quite some time. But I think there's amazing opportunity in this technology. I think the healthcare industry will go kicking and screaming, but hopeful that we get to a better place.
We need to create T-shirts, I think. AI for society, and have Austin on it, right? That's his tagline. All right, Adam, what do you think here?
Yeah, look, I'm super bullish on this. I obviously agree with Austin on some of the challenges that we have to make sure that it's not, taken advantage of for the profitability. But I think it's like the front end is probably the furthest ahead with patient care. I think that might be, happening now with recommendations. I think that's the furthest away. I think the most exciting part is drug. We are all familiar with drug discovery. I think this is now drug creation. And then I think digital therapeutics, right? Next gen sequencing. So if you look at like ARK Invest has some great reports on this, definitely check that out. But the speed at which we're able to make drugs, create new drugs, it's basically like we used to be looking for a needle in a haystack. Now we're creating our own needle. And I think that's really important for the big one, obviously being oncology, at least in the United States. That's on drug discovery. I think the second part that's really exciting is on detection. My sister had breast cancer. Right, so obviously we're all familiar with the BRCA gene. Basically, if you can have detection be less invasive, faster, cheaper, this drastically lowers cancer rates, at least in the United States, mortality. And then the third one is digital therapeutics, right? So those three areas: detection, digital therapeutics, and then drug discovery. AI is completely revolutionizing this already, and I do agree with Austin that it needs to be obviously, with a measured approach.
All right, we got two more questions, and you guys are all network and meet some VCs, and you guys could talk to everybody. So let's try to get through these, and then we could go out there and grab a couple drinks. Global insurtech market size was valued at 5.5 billion this year, predicted to be 146 billion by 2030. Whether it's insurtech or another vertical with high growth projections, where do you see the biggest opportunities, and what are the specific factors you're looking for when investing in that space? I'm going to go back to you, Adam.
This question is way outside of my comfort zone. I know very little about insurtech. I looked it up and then I decided to not answer this question. So I will say something that I'm really excited about, which is gaming and content creation. We have a metaverse kind of gaming side of the world, $280 billion, bigger than, as you know, music, TV, streaming combined. We invested in multiple gaming companies, not just in the games, but platforms, connecting people. I mean, this is the ultimate community. And I think just one thing to point out, what I'm really excited about in this space is, if you remember during the pandemic, the WHO had this big thing before the middle of the pandemic. And what was it? Gaming rots your brain. Don't put your kid in front of the TV. Don't put them in front of gaming. It will rot their brain. It is making them less social. And what happened during the pandemic that got me really excited was the WHO 180 degrees said, you know what? Gaming is great for your kid. Gaming is great for their connection, great for their community, right? And I think that is something that's huge for our portfolio, for the content creators, and also for the platforms that host tournaments. I mean, I can game and play with anyone across the world. And if there's anything we need more now than ever, it's connection across borders. Through really interesting ways. And I don't think social media does it. And I think gaming can be a way into a new way of social media.
All right. Quickly, Erica and Carolina, any other verticals with high growth projections that you want to give a shout out to that you think is, you want to make a projection?
I'd say in insurtech, there is a lot of opportunity there. I mean, they're one of the biggest industries, but they are so far behind other industries in terms of adoption of technology, and also just from an infrastructure level across carriers and brokers. if you ask any person working within the industry, 9 times out of 10, they'll say there's barely any innovation. There's been small steps made. So there is a lot of opportunity there. It's a behemoth industry with the same challenges of data as like banks do, but there's not as much focus there. And so I think there's a huge opportunity. And also with tech-enabled insurtech, there's a big opportunity for them to supersede some of these incumbent players because they're not bogged down by some of the regulatory or just the infrastructures that some of the larger players have. And so yeah, I liked the insurtech question, I will say.
Yeah, it was funny because when you put that question on there, I was thinking a $5 billion market, that's like incredibly small, but you know, I think it will get big. We think that the biggest opportunity in kind of a parallel market is legal tech, right? So if you look at law firms, they've always sort of almost on purpose created inefficiencies for a really long time to sort of maximize billable hours. And we think that the whole legal industry is getting dragged kicking and screaming into, you know, a new digital age that they're finally willing to adopt, mainly because they're terrified of AI.
All right, so I'll be quick with it, but two industries that also super high growth. Obviously AI, that's not a surprise to anyone, but I'll add another one in there we're really excited about, which is quantum as well. These are areas that are super nascent, going to be incredibly important for the future of the technology ecosystem, as well as, you know, I guess society is kind of my theme today, so I'll stick with society as well. But the way to the second part of your question of like how you assess those fast growing markets, especially when you're looking at early stage companies and seed companies, you know, we really assess it based on the team, the technology, and the traction. And it's really in that order too, because the first thing you're investing in that early in a market that's growing quick is the founders. They might have to pivot to something completely different in 12 months. So you want to make sure the founders are the right people for the problem statement they're going after in that market. And then the technology, you know, what are they actually creating? Is it differentiated? Is it 10x better than the incumbent in the market today? And then traction. Have they actually been able to get positive indicators or signals that they're doing something right? In pre-revenue, that looks like different things, but you know, with the you know, rise of open source technologies, maybe that's GitHub stars, maybe that's Twitter followers, or maybe that's employees wanting to work for your company. So there's a lot of ways to kind of assess the companies that are still super nascent and early, but team, technology, and traction is really how we look at it.
All right, Austin. Austin, I'm going to come back to you right now, so I don't forget
Yep.
you for this last question, right? That'd be VC funding in fintech startups has dropped globally about 50% year over year in the first half of this year. Has the sector become saturated, or is it just a part of the general slowdown in venture across all sectors? Austin, what do you think?
Yeah, so within the fintech market, I think it's definitely following some of the overall general slowdown. But you know, this year there was also a pretty big market event with the collapse of SVB and then the lack of trust within some of the banking industry, especially the smaller banks. So if you take that and then you kind of think about the fintechs that are even smaller and even riskier than the $100 billion asset managers that collapsed, that's going to give a lot of investors pause. That's my opinion on it. So I think they got kind of the double whammy of the market and then unfortunate events from market participants that failed. And then, you know, the preceding events that happened after that, which was like, you know, an escape of capital just to the biggest providers, which is everything the fintechs are probably fighting against. So, you know, there's a lot of, I think, negative things that happened. But I think there'll be a bounce back in that, though, in the next year or so.
Yeah, I agree. Especially on fintech, I think it had a really rough year with Silicon Valley Bank and everything happening in Switzerland, and we saw what happened with the U.S. government, and now if anybody can be bailed out, this becomes problematic. So, but I do think that it's not just venture in general. I love energy here, even though we don't do this. I love energy here. I love commodities. I love sustainability, and I think those areas that it's less about. Fintech had a problem with speculative assets, speculative investing, and I think now people are starting to go to regions and to companies and countries that are producing real goods with real value that basically have streams. Crypto suffers from this, right? This is a challenge we'll have to get over. But I think the larger venture group will have to move through this, especially for healthcare and energy. And I think the areas you'll hear, there's a very nice quote from Richard Feynman, which is, I'd rather deal in answers that I'd rather deal in questions that I don't know the answers instead of having an answer that can't be questioned. And so I think that those areas where you can still question, I think is really, really important. And fintech right now is going to go through a downturn. I think you can still question other areas.
All right. QR code is up now for the finalists. As we wrap up here, can we just get a show of hands of investors in the crowd? I know we got some VCs. Spencer, you could raise your hand. I see you. There's alligator arms with some of the investors. There you go. So that'll hopefully help some of you founders identify who to talk to after this. Erica or Carolina, you have any other last thoughts here?
Just a quick thought on fintech. I mean, I think in reality, what happened was, the sector just got way overheated for, probably close to a decade. I mean, I remember when we first started our fund, we were marketing our fund one. I was like, oh man, I wish this could just be a fintech fund. My life would be so much easier, because people were just chomping at the bit for anything fintech. You would see a fintech company with $3 or $4 million in revenue. They're like $1 billion valuations. So, basically the sector just, it sucked everything for so long. They got to sit down and have a rest for a little bit, but I'm sure it'll come back.
Yeah, just to add to that too, I think it was definitely overheated during the pandemic as well, specifically with low interest rates, stimulus checks, like there was pent up demand to go out and spend money. Buy now, pay later took off in a huge way. And so I think now that there's been a contraction in the market, the SVB debacle, now there is a contraction from the all-time high that there was during the pandemic. But I also think it's not as drastic as people think. So I think there still is a lot of opportunities when it comes to the bond market, for example, in fintech. And there's a lot of opportunities generally, but I think to your point on the overheated nature, we definitely saw that during the pandemic specifically.
All right. Before we show the answers, I just want to give a couple quick shout outs to some important people here. First, Robert Hughes. Robert, raise your hand right there. Robert was one of our first sponsors here. He is with Citizens Bank right now. He is a dot connector. He can help you to capital, and he can also bank you. So Robert, talk to Robert. He's the man if you're looking for bank. And then that guy in the corner who's standing up there, Tyler. Tyler is the smart guy who wrote all the questions that I stumble over. So you give a quick shout out to Tyler, PrimeTime VC co-founder. Nadal, why don't you show who won, and whoever has won, and you take the dais. Here we go. Austin. Home court advantage, Austin. Austin.
Thank you, everyone.
Stand up and do your victory speech. The fix is in at IBM.
So you're going to have me back, not with the home court advantage, and see if I'm actually any good at this. But thank you. So super happy to be part of this awesome panel here. Shout out to the rest of the IBM Ventures team who's investing in seed to Series B companies across enterprise B2B software. It's a super exciting time to be doing what we're doing. I think there's amazing innovation that's happening in the market. Like my answer around the macroeconomic concerns, I think it's still an awesome time to be a startup founder and an amazing time to be deploying capital in really disruptive technologies. I'm proud that we're being able to bring that new technology and innovation into a storied company like IBM, who's been around for so long. So yeah, I mean, if you want to talk more about what we're doing, or if you have a startup that's within our thesis that you want to chat with me about, or just get connected to IBM or the Ventures team, come find me after. I'll be hanging around, but thanks for having me.
All right, we got drinks out here. Mingle up. Thank you for coming. Appreciate it.